think he's missing three giant skunks sitting on the woodpile right in front of us. Number one is a epic monetary fiscal collision that we haven't seen. I haven't in my lifetime, and I've been involved since 1970 on Capitol Hill. Next
collision
year, starting October, because starting in October, fiscal year 2019, the federal government's going to borrow $1.2 trillion, which is an astronomical number for 10 years into a business cycle expansion. At the same time that the Fed is on automatic pilot, everybody says they're going to be shrinking the balance sheet. They've pivoted to QT, quantitative tightening, for the first time in 30 years, and they will be dumping $600 billion of existing bonds into the market at the same time. So you have $1.8 trillion of government debt looking for a home in fiscal 2019. I don't see how the market will clear anything close to 290 on the 10-year. There's going to be a monumental yield shock that will take the market to 3% and 4% and probably overshoot beyond that, because there's no help coming from the other central banks around the world. The ECB is going to the sidelines.
The only thing I'd say about this is everyone's aware of this. It's not an exogenous event that's going to come into the market and shock everybody. I mean, I'm buying treasuries today knowing there's 1.8 billion of supply coming in, and I apparently am feeling pretty good about those levels. So that was the first thing you said was a problem. What are the others that you think are a problem?
No, but I would say good for you, but words aren't the issue. It's flow, it's supply and demand, and it's the lack of any support from central banks. The ECB's on the sidelines, and what's happening in China is they're finally trying to get their massive debt under control. So I think the market may know they're speaking the words, but 1.8 trillion is going to hit the bond pits like a tornado, and yields are going to soar, and then all the front runners who have been buying the bond because the Fed was buying are going to start selling, because effectively the Fed is selling. Now the market at 26
David,
times...
Why is $1.8 trillion scarier than the net issuance of $1 trillion a few years ago, which the market absorbed at historically low interest rates?
Because the Fed was buying bonds hand over fist, as you recall.
A small percentage,
They bought 3.5 trillion worth of bonds, drained it out, and it wasn't just the Fed. It was every other central bank in the world. You've seen the numbers, 15 trillion of debt, much of it U.S. government or GSE debt, has been drained out of the market into the central banks during that period. Now we're in a totally different ball game. We've had a pivot to QT. It will spread worldwide, and the pricing in a QT market is dramatically different than a QE market.
Yeah, we're seeing that higher volatility the sense that maybe we're in the middle of a kind of paradigm shift. David, we have to leave it there. I know you have more points to make, so come back, because this guy's just getting started. There's going to be a lot of time for yelling in a tie. That's David Stockman joining us.
If you have been curious how to make the money when markets fall, please visit marketcrash.money and get some additional information. Specifically, I have compiled some interesting reasons why stock market crash 2010 is a definite possibility, why we could be going for another Bitcoin crash, and more importantly, how to not let the market crash or the Bitcoin crash take advantage of you. Find out how to profit. If you're a new trader or an experienced trader, but you're looking for new ideas, new ways, how to take advantage of the market fall, because quite honestly, markets do fall much, much faster than they go up. So it represents, for a trader, a great opportunity to profit on the opposite direction of the market in a much shorter time frame, and oftentimes maximize much bigger returns. So if interested in knowing the ways how I trade weekly options for huge profits as much as 3,800% to 5,000% on certain days, get in touch with me. Visit this link right here, how to profit, read some information, and schedule your consultation. I'll be glad to help out and get somebody on the right track and show you some of my profitable ideas and share some experience which I've accumulated over the last 30 years trading weekly options. Thanks for watching. I hope this was helpful. We'll see you soon.